The comprehension of stop hunts holds significant importance for traders, as these strategies are employed by institutional players to activate retail stop losses. This insight facilitates the identification of lucrative trading opportunities. Consequently, recognizing prominent key levels, such as support and resistance, becomes imperative within trading strategies. These levels garner considerable attention from numerous traders, thereby amplifying the probability of a stop hunt occurring. Furthermore, analyzing price action on lower time frames following a breakout furnishes deeper insights into prospective trading opportunities. This analytical technique empowers traders to make well-informed decisions. Moreover, employing a limit sell order position below a resistance level allows traders to capitalize on price reversals amid potential stop hunts. This strategic approach acts as a safeguard against potential losses that may arise from false breakouts. In addition, placing a limit buy order above the breakout enables traders to profit from authentic upward movements. This creates a balanced trading methodology, accommodating diverse market scenarios. Integrating stop loss and profit targets subsequent to order execution proves crucial for effective risk management. This practice not only helps in securing gains but also in mitigating potential losses amid volatile market conditions. Moreover, the customization of the Fibonacci tool by disabling extraneous levels allows traders to concentrate specifically on the 0.618 and 1.618 levels, thereby enhancing the accuracy of their analyses. Transitioning to multi-time frame analysis is essential for validating price action. Traders should navigate from a higher time frame to a lower one to derive more profound insights into market dynamics. Additionally, the inclusion of the MACD indicator aids in trend confirmation. This tool offers supplementary assurance that price is likely to experience a rebound upon reaching the 0.618 level. Consequently, grasping the various types of divergences and their identification methodologies is crucial for successful trading execution. A graphical guide can significantly assist in the effective recognition of these patterns. Setting appropriate take profit and stop loss levels is vital for sound risk management within trading. This strategy serves to maximize gains while simultaneously minimizing potential losses. Moreover, selecting a dependable trading platform can substantially enhance the overall trading experience. SimpleFX stands out by providing a diverse array of tools and bonuses tailored for traders aiming to optimize their strategies. A range market is defined by lateral price movements, characterized by discernible support and resistance levels that traders can effectively leverage for informed decision-making. This foundational understanding is critical for successful trading. The midline operates as a pivotal reference point within the range, assisting traders in discerning potential price movements between the upper and lower bounds. This element enriches the analytical depth of trading strategies. Furthermore, analyzing price action as it approaches the midline is integral to forecasting potential breakouts or reversals. Such analysis can exert a considerable influence on trade outcomes and risk management strategies. Moreover, possessing a robust understanding of price action is essential for traders, especially in recognizing rejection points alongside potential support or resistance levels within the market. Finally, establishing proper profit targets and stop-loss levels is crucial for the effective management of risk, thereby optimizing potential gains in trading strategies. Choosing a reliable broker can markedly enhance trading efficiency, particularly when the broker offers a user-friendly platform replete with integrated analytical tools designed for executing trades.